Hey guys, Merry Christmas! So I have been reading and answering your comments and I see that you guys are requesting me to make a video to show you step by step on how I analyze my stocks. And this is the season of giving, so I thought why not I make a step-by-step tutorial on how I analyze my stocks, plus I will give you my stock pick for the year 2021. I'm all about giving you the most jam-packed content for the time that you have spent watching my videos, so I will let you know upfront that my stock pick for 2021 is Apple, with the ticker symbol AAPL. And at the end of this video, I hope you can take away some tips and tricks and apply into any of your investments and not just on Apple, and I'm sure it will up your investing game in no time. I am personally expecting a growth of over 15% for Apple for the year 2021, so if that's what interests you, stick around until the end for the full-blown analysis that I'm about to present to you. This video will be segmented into a few steps that I take when I analyze any given stocks, and for today's purpose, it is Apple. So the first thing I look at is Apple's business model. Next, I perform fundamental analysis on Apple and I will show you how I do my quantitative and qualitative analysis. Thirdly, I will look at the future prospects and it comes in the form of short-term and long-term catalysts. And lastly, I will present to you my technical analysis and my long-term price target. This is the season of giving, so help me smack that like button down below, and without further ado, let's jump right into today's content. First and foremost, let's look at Apple's business model. Apple sells electronic gadgets such as the iPhones, iPads, MacBooks, AirPods, and Apple Watch. And on top of that, they also sell software as a service such as the apps on the App Stores, Apple TV subscriptions, and Apple Music. So if there's one thing that triggers people when we talk about Apple, and we can all agree it is its price tag. Their latest iPhone 12 starts at $799 or around 4,000 ringgit, and it doesn't even come with a charger. Slap a charger on it and you can easily buy 2 flagship Android smartphones. While it's obvious that Apple's target group is the medium to higher income bracket, we should also not forget that Apple is also taking baby steps to penetrate the lower bracket segment. Their iPhone SE 2020 starts at $399 or just 2,000 ringgit, and their latest Apple Watch SE starts at $249 or 1,139 ringgit for a smartwatch. And if you still think that Apple only charges skyrocket prices on all of their products, then it's time for you to think again. For those of you watching this video, if you had the chance to try out any Apple products, I'm sure you agree with me, the user experience and the product durability with Apple products is phenomenal. And their ecosystem integrates so well and so seamlessly with each other that transferring any file via AirDrop is just merely a 2 seconds click away. The goal of Apple introducing more lower end products is to pull more users towards its ecosystem. And when you are deep in it, it is nearly impossible for you to leave it because it is that good. Now, before you say that they are unethical or whatsoever, as an investor, I would say that this is a brilliant business model. And at the end of the day, I'm in the stock market to make money. It is just how capitalism works in this world, and if you truly understand it, every great business model out there is built based on capitalism. Google, Microsoft, Netflix, Amazon, you name it. So conclusion from this section, I love the company when it has a strong and unique business mode, plus it has a scalable business model, or in this case a B2C or a business to customer type of business model, because that's where you can scale and grow your ecosystem. Next, we look at the fundamental analysis of Apple, and in this case I will start off with quantitative analysis, which is based on their numbers and financials. As of the making of this video on 13 December, Apple has a market cap of $2.08 trillion, making it the most valuable company in the world. With a PE ratio of 37, Apple currently trades at about $132 per share, which leaves it a 12% growth headroom to its 52-week high of $138 per share. It has a dividend yield of around 0.67%, which indicates that it is still heavily reinvesting its profit to grow its business, and that is a good sign to me as an investor, as I always love to see company reinvesting its profits or keep them as cash and not pay dividend and stay stagnant. Looking at its financials, let's start with income statement. From its 3 latest financial years, Apple has grown its revenues from $265 billion in 2018 to about $274 billion in 2020, right in the middle of the raging pandemic. Correspondingly, its gross profit has also increased from 102 billion in 2018 to 105 billion dollars in 2020. Another line that I like to see is the research and development line, which tells you how much the company is investing into its business to expand its breadth and reach. And in this case, Apple is investing heavily into its R&D from 14 billion in 2018 to nearly 19 billion in 2020, and that is most probably due to its latest M1 chip from macOS, but more on that later. In terms of net income, it has decreased from 59 billion in 2018 to 57 billion in 2020. 2 billion difference, but those are mainly thanks to the pandemic as well as the high R&D cost that Apple is incurring to grow its business, so not something that I'm worrying at all. In terms of balance sheet, I refer to its latest fourth quarterly report ended at September 2020. In terms of cash and cash equivalent, Apple has 38 billion US dollars, which is far lesser than a 48 billion they have in 2019. And as a result, its total assets have decreased from 338 billion in 2019 to 324 billion in 2020. But if you were to look at its current assets to current liabilities, we have 143 billion US dollars for current asset versus 106 billion US dollars for current liabilities, which gives us a quick ratio of 1.34. That means the company is in a healthy financial position to repay its short-term obligations without any problem. And I always prefer companies with quick ratio above 1 so that I do not need to worry about any short-term financial issues. Next, we look at the cash flow statement, which is my favorite part of financials, as we are looking at cold hard cash values, something that you can't mess around with accounting tricks. We look at three things. Firstly, the cash generated by operating activities. It generated 80 billion US dollars of cash in 2020 as compared to the 69 billion of cash in 2019. That itself tells you that the business has no issue at all and is growing at a healthy rate of 16% year over year. Alright, moving on, let's look at the cash generated by investing activities. Apple generated net outflow of 4.3 billion of cash in 2020 as opposed to inflow of 46 billion in 2019. That is mainly attributed to the purchase of marketable securities from 39 billion in 2019 to 115 billion in 2020, a whopping increase of $76 billion. It is very normal for companies to purchase marketable securities when they have too much cash on hand. So there's nothing really to worry about here, as marketable securities are usually very liquid in nature and can be converted into cash in a short period of time. Now we look at the cash generated by financing activities. From outflow of $90 billion in 2019 to outflow of 86 billion in 2020, not much of a difference if you ask me. It's normal for businesses to leverage on debt, and it doesn't seem like Apple took on any new huge debts, so things are looking super healthy if you ask me. Now, after looking at all of those financials, I can then derive a few financial ratios. Firstly, the price to sales ratio has been increasing from 4.09 in 2019 to 7.82 in 2020. It usually means the stock is increasingly overvalued, but it can also mean the market is valuing the company more as time progresses, which to me is a good thing as long as the ratios increase steadily and not balloon up erratically. Another thing that I like to look at is the market cap. From 995 billion in 2019 to 2.08 trillion today, which is a little bit more than double year over year. It's a bit too much in terms of valuation, but then again, it's also a sign that the company has been gaining a lot of market attention, as well as due to the US Fed's pumping money into the economy. Now, after all of the quantitative analysis, I then look at the qualitative analysis. In terms of management, ever since Tim Cook took over as Apple's CEO on August 2011, Apple's valuation has more than tenfolds from $11 per share to over $122 per share. That, in historical performance terms, gives you an idea that the company is led by a leader that is capable of growing its business steadily over the last 10 years. If we were to look at Microsoft, which people likes to compare Apple with, it is infamously popular for being a slow growth blue chip tech giant ever since Steve Ballmer took over as its CEO from 2000 to 2014. Look at Microsoft valuation. It is almost stagnant for the entire period. Heck, you will lose your your money to inflation if you invested in the entire 14 years period. Microsoft has only begun took off after Satya Nadella, a visionary leader, took over as the CEO in early 2014, and that just speaks volume of how important a leader is to any particular company. And another reason why I love about Apple is that they are not only targeting the premium bracket segment, they are also targeting the lower income segment by introducing more budget-friendly products, and that in turn will increase its market share in that segment. And as a user myself, I own almost every single Apple products that you can imagine, and boy must I tell you, it was worth every single penny that I've spent. My iPhone 11, which is my first iPhone that I've bought last September, is still one of my best purchases so far. It has improved my general workflow, be it replying comments and creating content on this device, and every time I look at my phone, I've grown to like it more and more, and I've not had that feeling with my Android phones that I've used for the past 10 to 12 years. My iPad 2018, which I've bought to replace my iPad mini 2012, which cost around 1,200 ringgit back then, that I've used for my university studies and still kicking now. It's almost 8 years with the latest iOS installed. Does that not scream value for money to you? And my MacBook Air 13-inch 2020, I've just recently bought this back in June this year. I've been using it day and night ever since to create content for Instagram, for YouTube, as well as for my other side hustles, to which until today have paid me back for the cost of this MacBook Air, which is around 4,300 for the i5 upgrade. And I've actually just ordered the new M1 MacBook Pro, which should arrive roughly at the end of this year, so I'm really excited to get my hands on it. And my AirPods, boy, I don't even know what to say. I've been abusing this thing for more than 8 hours a day. The AirPods have been my go-to wireless audio device because I can just pop them on and off and it syncs seamlessly with my iPhone. Okay, I can go on and on with my love for Apple products, but I hope you don't take it as if I'm bragging, as I'm just sharing you my perspective as a consumer, and that is very important for any company that wishes to capture the heart and loyalty of any of their consumer, and that will build a very strong brand loyalty. Remember, a good B2C company has to create value for its consumer, and if the consumer loves the product and find it irreplaceable, it is imminent that the company can only go upwards. Returning to the space station, paving the way for future missions beyond. Alright, I hope that quick fundamental analysis gives you a good idea on how to analyze a company based on its existing or historical performance. Apply that onto any other company and I'm sure you can see more beyond a company's share price. Now with that said, after assessing a company's existing or historical performance, I then look for the company's future prospect or the short and long-term catalyst. Let's start with this short-term catalyst. Apple will be revealing its quarterly report at the end of January 2021, and the QR is expected to blow past any analyst estimate for a few good reasons. The quarter ending December, which is from September to December 2020, is where Apple introduced its new lines of product, such as the iPhone 12 series with the 5G technology, as well as the new MacBook lineup with the all-new M1 chip. December has always been a month for shopping and holiday season, and customer spending increases off the roof due to the Black Friday sales, the Double 11 sales, the 12/12 sales, and etc. And with the raging pandemic going on, more and more people are relying on technology and electronic gadgets to stay connected online. Be it for school or for work, demand for Apple product has been off the roof, and it is proven in Q2 and Q3 report of Apple's quarterly report right in the middle of the pandemic. Next, on the new M1 chip that Apple has just recently rolled out on their new Mac lineups to replace the Intel chipset. Just to give you a brief understanding of its performance, the cheapest M1 MacBook Air 13-inch at around 4,000 ringgit is almost on par with the spec'd out MacBook Pro 16-inch powered by Intel at 12,000 ringgit. Does that not ring a bell to you yet? Upgrading to the M1 powered MacBook Pro and Mac Mini just blows out any competition or any Intel powered laptops in the market. And this just gives you an idea of where Apple is heading to develop their state-of-the-art technology to power their own Mac OS lineup without paying a premium to Intel to do so, and that will result in a lot of cost saving. We are expecting to see Apple roll out its upgraded M1 chipset, or some call it the M2 chipset, in the middle or late 2021. I can't imagine what the more optimized M2 chipset is capable of doing, but one thing I can imagine, Intel will no longer be the 200 billion market cap company in 2 to 3 years time. In terms of long-term catalysts, we are looking at the long-term horizon and make an educated guess of where Apple will be in the next 5 to 10 years. You see, no one would have believed you in 2008 if you were to say that the 2020 smartphones will just have a piece of screen with no buttons on it. But look at where we are today. And with that point in mind, just recently, Apple have been reportedly working on an Apple car project named Project Titan. Whether or not it is an entirely built from scratch electric vehicle Apple car, or it is just an autonomous system that can be implanted on the current vehicles, we don't know about that. But knowing Apple, they would like to have control over everything. They will not just plant their product on a Honda or a Toyota and let their brand's fate decided by the others. Back in June this year, Apple CEO Tim Cook reportedly said that they have been focusing more onto the autonomous driving system, and a reliable leaker and Apple analyst Ming-Chi Kuo said that we could see that Apple could launch Apple Car between 2023 and 2025, and that the car will be Apple's next star product. Imagine a digital bank that you can just install on your phone, where you get your salary, pay your bills, get your mortgage and loans, invest in stocks or bonds or crypto, track your expenses, and etc. That is essentially what Square and PayPal is doing right now, as well as a few other companies such as Ant Financial, WeBank, and many other more digital banks that are trying to do the same thing. With Apple's extensive reach towards the entire universe, what do you think will happen when Apple's digital bank is rolled out to the entire world? Imagine a bank profiting from every iOS users or consumers out there. That is massive and will blow every digital bank out of the water. The last long-term catalyst here is the 5G technology, and I've categorized this under the long-term prospect as I don't see any widespread use and implementation across the world right now. Apple have only recently released their first 5G product in the form of iPhone 12, but essentially the entire world is still running on 4G and even 3G in some part of the world. However, Apple is also reportedly working on its first cellular modem, which could bring 5G to its MacBook lineup, and that will eventually blow Qualcomm out of the water, which is its current modem supplier, just like how Apple removed Intel from its playbook. And when that happens, Apple will have full control of the entire 5G value chain, just like how Amazon is controlling the entire logistics value chain. Now, just to summarize, Apple could very well be the leader in the consumer electronics industry, the 5G telco industry, the automotive industry, as well as the finance industry. Does that not excite you yet? I mean, look at Tesla. It is poised to dominate the automotive industry, the energy industry, the autonomous and AI industry, as well as the aerospace industry, and have rightfully shown that they are capable of achieving that. All those are the signs of company with vision, and you will be foolish enough to bet against its prospects. And moving on, with all of those fundamental analysis done, the next question you will ask is, so when do I buy into this company? Should I wait for a dip, or should I wait for a stock market crash? And that is when technical analysis comes into play. Well, to begin with, never enter into the stock market thinking that you can predict for a stock market crash and you are just waiting for the next dip, or even think that you can time your entry and exits perfectly. Use technical analysis as a guide to help you start a position with your investments. And the keyword that I use here is guide, and not for you to rely solely for your investments. And with that said, let's jump right into the technical charts of Apple. I personally like to use TradingView to do my technical chartings, and today I'm gonna introduce two simple indicators that I myself use frequently, and that is the RSI and Fibonacci retracement. The RSI, or the Relative Strength Index, works well for the stock market, as the stock market tend to go uptrend in the long term, unlike the forex market. Go to the top bar and look for this FX button, choose the Relative Strength Index indicator, and you should be able to see a purple colored region with a purple line at the bottom. Typically, RSI measures the level of stocks being bought, whether it is overbought or oversold, and a good thumb rule is RSI of 30 to 70. Any RSI above 70 is considered overbought and tends to come down shortly after as people start to take profit, and any RSI below 30 is considered oversold and tends to go up shortly, as this is when the fear sets in, typically during the start of a crisis, sell-off, or just general generally bad sentiment. I personally like it when the RSI is at the 45 or lower region before I enter into any position. If you were to zoom out Apple's share price, you will agree with me that the general trend for Apple is uptrend, and you should be looking for buying opportunities as opposed to selling opportunities. Another indicator that I use is the Fibonacci retracement. This indicator works well when the share price of a company is in a general trend. You want to plot 2 points, one beginning on the swing low and another one ending on the swing high, and from here you can see that the immediate support level is at around $118, with the next resistance level at about $138. And rightfully so, the months after September, the prices have started to trade sideways with a very small swing highs and swing low. When prices started to trade sideways, this is when buyers and sellers come into consolidation area and agree at the midpoint. Just imagine it being a rubber band. The further you pull, the more potential energy it will build up. And when a catalyst such as a good or bad news happen, it will either shoot upwards or downwards with a very high momentum, resulting in huge share price changes. Just drawing another Fibonacci retracement here, we can see that the immediate support is at $120. And the resistance is at $135, which means that your short-term reward is higher than your short-term risk. So that will mean a good time to enter into this stock. And if all goes well, we could very well see Apple hit the $138 share price sometime in 2021. And with an upcoming stimulus check from the Feds, this could very well be achieved within months from now. Take my analysis with a pinch of salt, because no one in this world can predict the stock price of any company. And all I'm doing here are just speculating and making educated guess at best. Remember, this is not an investment advice, as there are no guaranteed return for any investment, because there will always be risk of something happening beyond our control. With all of that said, I've come to the conclusion of this video, and I know it's been a long one, but I hope I've delivered what you have requested. Use the knowledge that you have learned from this video and apply it onto any company that you are gonna invest in, and I'm sure you're gonna up your investing game in no time. Year 2020 has been a game changer to me, and I've never imagined that I would be sitting here today recording to a camera and providing value to you guys. And trust me, I've put a lot of effort to make sure that my content is worthy of your time watching my videos. And if you have stayed until this part of the video, I would like to express my appreciation from the bottom of my heart. And you guys have made me what I am today, and I will do better for the year 2021. Merry Christmas, have a Happy New Year, and as usual, I will see you in the next one.